everybody, we are here and starting to do what we do. Maybe I'm trying to get Instagram to get started. Let's see if it wants to start. Does Instagram wants to get started or no? Hey everybody, it is Sunday evening. We're doing our live at 5. We are up and running. Hopefully, let me see if we can see on Instagram or not. If you're over on Instagram and you're watching me, say, yep, we see you. And if you're on Instagram and you don't see me, you're like, nope, you're not over here. And it looks like it's not running live. So let's me edit it to make sure that we are running it like we should be on Instagram. Looks like that key doesn't want to run. Let's get a new, Instagram requires a little bit extra. Sunday live at 5. I'm going to give us a simple title so that way we can keep it pushing. I got some good stuff for you that we're going to share this evening. Talk about what the week had to offer us. It doesn't want to let me edit that. So maybe it's already running. It doesn't appear to be running on IG, but maybe it is. It says you are live. So, all right, we're going to go with that. We're going to say thank you for being live on Instagram. So it is Sunday, June the 9th. June is already up and running. May we finished a week ago. Now we're ready for June. We finished our first week of June. Interesting week, to say the least. A lot of stuff was going on. What you see on the chart right now is SPX for last week. We see SPX for last week. Hey, Marcia, SPX for last week. So I've got it on the monthly chart, though. So it's more than just last week. It's really last month. So I got it on the monthly chart. Obviously, we can see we're trending upwards. That does not take anybody, geniuses to tell us we're trending upwards, because we are. Each candle here is a monthly candle. Each candle here is a monthly candle. If I was putting a few lines on some supports, this would be here. Now, what we are is we're up here in all-time highs. So we're not necessarily clear on where we're going from here because, yeah, we could keep going. This is a mini minor hammer here on the chart. So could it go up higher? Absolutely, it could, because the market can do what the market wants to do. Now, the hammer is not a huge hammer, so it's not a strong wick coming down, but because it's looking, this ain't quite doji-ish either, right? Not quite a doji. I probably could put another support or resistance right here with these candles, and as a matter of fact, I believe I will. I just think I will. Right in here is going to be another zone. Remember, when you put lines on here, you're talking about zones. All right, let's switch to the weekly chart. Let's see what last week did. Well, make it a little bit bigger so everybody can see. I can see clearly now. The chart is bigger. Okay, so I'm going to make it look and feel. I'm going to make it a little bit larger so everybody can easily see. Those who are, watching from the comfort of their home computers can see what's being seen. These are weekly charts. So all of these are weekly candles. Last week was a green week. The previous 2 weeks, the 2 weeks ago was doji. And then last week was a red hammer, which that hammer lets you know that we want it to be going upwards. We want it to be going upwards, and upwards we went. Right? Let me let the world know that I'm live so that folks will know that they can come on in. No reason to wait. Y'all hold on. There we go. We are on live. You can come on. Don't have to wait to see. Maybe she gone. No, she on. She is me. She is on live. Let's get it. Let's go. Let me make sure I got all I'm hitting all the places and all the peoples. I think I've hit the vast majority of the group so far. Okay. Back to where we were. This was a hammerish looking candle. Well, this one here, the red was the hammer, basically letting you know that this long wick here is an indication that it might have wanted to go further. It came right on down to the 9-period EMA and when it moved on. Now, there's all kinds of things. I know it may not be as simple as it's a hammer and it's at the 9-period moving average. I totally get that. But I'm telling you that these things can be indications that you can look at even in the future. You can say, well, if it's ending on a hammer, then it may be an indication that we're going to move forward or move higher on the next time we have, with the next trading day. All right. That's how that goes. Okay. Does it always work that way? No, but a lot of times it does. Yeah. Nothing is ever all the time. Right. Okay. So this was last week, green week. Let's go to our daily. Look at what each day last week did. In case you didn't already know me, I'm Arlissa, educator to trader. If you haven't liked and subscribed to the channel, go ahead and do so. If you're going to hang out a little bit with me, we do this every Sunday at 5 p.m. Eastern Standard Time. You can come on in every week and hang out. Actually, I'm on every morning, and starting tomorrow, we're going to be on at 8:30 in the morning. I want to make sure that I mention that for the morning, that we're going to be on at 8:30 every morning starting tomorrow. Hey, Janae is here. Asleen is here. Tanya, hey, y'all. Ward is here. Lisa, Royal Diadem, and Marsha. Good afternoon. Good evening. I hope y'all had a good weekend so far. It's not quite over. We still got a little bit more time. I always feel like when we get to Sunday evenings, I have so much stuff. Like I need to make sure that I'm, doing all the studying I need to do and looking to see like, okay, playtime for the weekend is over. Playtime is over. Okay. So anyway, these are daily charts. We're looking here. I'm going to put a few more lines on now. You can put a lot of support and resistance lines on there. And it would be good. I didn't do it while I'm on here with you all, but it would be good to make sure that you like put on monthly, maybe one color. Weekly can be a different color. Daily can be a different color. That way you'll be able to differentiate the strength of your zones. Okay, I see a mini witty gap right here. I want to make sure that we get this included. See a little gap. It's not a big one, but we'll count it. All of the gaps count because price does like to come on back to the gap. Let me see if we got one up in here. And did price action fill it all the way through? And yeah, for the most part, it's a teensy weensy gap there. It probably could go up just a little bit higher over here. Y'all probably can't see that. It's very, very close, but there we are. That's a little bitty gap there. This one here got filled, and there's some down here that will be filled. Gaps provide support and resistance. When the price comes back down to them, nature wants to come back and fill up the gap. So just know when you're charting that you can incorporate support and resistance in your charting things. Okay, I'm only staying here I'm on SPX a lot longer than I want it to be, but I wanted you to see what kind of stuff happened last week. And then this is the last day. This was Friday. What does that indicate for a coming week? This in itself is a doji, so we're not really sure. The weekly chart gave you a little bit more indication, and you do have a few gaps here we can look at. I'm going to also look at SPY sooner or later, not right now. Okay. I want to share with you what are our earnings for, what's our earnings for this week? Well, we don't have a whole lot happening on earnings this week because I think season is kind of drying up. It'll take a break and then it'll start over again. Looks like we got Fuel Cell Energy, FCEL, is on Monday before the open. YEXT, Skillsoft, and Calavo is Monday after close. Academy Sports, MPA, Lilium, and Zeekr are Tuesday before open. Oracle, probably anticipated, is Tuesday after the close. Casey's Pet Meds, Rubric, looks like Mama's Creations, and Vistagen. That's all Tuesday after close. On Wednesday, we got AlphaMed and Vera Bradley. That's Wednesday morning. Broadcom is Wednesday after close. That may be anticipated, especially in the tech space. Dave & Buster's, Torrid, and Oxford are all Wednesday after close. Thursday morning, we've got Signet, looks like Korn Perry, Lovesac, and Wiley, Thursday before open. Thursday after close, Adobe, probably another one that's anticipated. RH there. Ammo, RF Industries, yes. And I can't see what that next one is. And Iteris. And then on Friday, there is nothing there for Friday. Good afternoon. Nothing there for Friday. Let's look at the meetings that are coming up, because we got PMI, CMI, all the pieces and the parts, and FOMC, all the things. I was going to be funny and say a whole bunch of other things, but basically we've got CPI, we've got PPI, and we've got FOMC next week. Let me not be silly, because people will be like, what numbers, what alphabet is she talking about? Okay, Monday, according to Forex Factory, we don't have anything on for Monday. All right, according to Forex Factory, Monday is clear. Tuesday, 6 in the morning, we got NFIB, Small Business Index. That's before the market opens. And at 1 o'clock, the 10-year bond. Notice the 10-year bond auction on Tuesday is an orange folder. That's important. Those 10-year bond auctions will move the market, okay? Or the market responds. I'll say it that way. The market responds to the 10-year bond auction. So you want to keep that in mind as you're, doing your trading for Tuesday. Wednesday, we've got CPI, 8:30 in the morning. So before the market opens, we've got CPI coming up on Wednesday. What you probably can do is, when you're setting your trades or writing out your plan for the week, hopefully you're writing out a plan for the week. If you're writing out your plan for the week, you can put on these days to see what's happening on each day. So that way you'll know what you're facing when you get ready to start to trade that day, right? 10:30 on Wednesday morning, we have crude oil inventories. 2 o'clock, we've got federal funds rate, FOMC economic projections, and the FOMC statement. Okay, FOMC statement means somebody's talking about the feds are talking, right? And then at 2:30, the press conference comes. These are the big boys. This is the anticipation. This is why FOMC people weren't really talking last week. It's because they were waiting for this week to give their little thing. This is where the rate hikes or pauses or rate changes, whatever happens with all the rate, this is where they talk about it right here in this statement and this press conference. Okay, this is the Big Daddy Mac. So Wednesday, 2:30, those. Sometimes it's just wise, honestly, to maybe, unless you've got a plan for some of these times where the volatility goes nuts, the plan may just be to watch. I'm just going to watch, because watching is a plan. That's part of your trade. It can be a whole part of your trading plan. I'm just going to watch and live to trade another day. Nobody has to throw money into the ring and hope it turn out right. You don't have to. Just wait and watch. Maybe wait till after the press conference, see what kind of move you see, and maybe enter a trade that maybe after, if you want to do as a buyer riding or a seller even. If you want to ride the wave, that's different. But you don't have to be in the way when the train comes and hope you can jump out the way. Just wait after the train passes, then go ahead and get on the tracks, right? Thursday, we've got PPI happening month over month. That's all Thursday morning at 8:30. I would, gander a guess that even though Thursday, of course, is after Wednesday, but that the market does take a little time, a lot of times, to absorb news that is given, and it shows up sometimes the next day. Okay, so Thursday may have the response to the PPI and the unemployment claims, but it also may be the market responding to what happens on this Wednesday. So keep that in mind. 10:30, natural gas storage. 12 o'clock, you've got Treasury Secretary Yellen will speak. FOMC member Williams will speak at 12 o'clock on Thursday. 1 o'clock, 30-year bond auction, orange folder, because though the market responds to those. Friday, 8:30 in the morning, import prices, 10 o'clock, University of Michigan sentiment, consumer sentiment, and inflation. Okay, so those are the things that are coming on for this week. We've got red folder every day, Monday and Tuesday. Well, we got an orange folder on Tuesday for the bond auction, but we've got red folders all of the other 3 days, Wednesday, Thursday, and Friday. So you want to trade accordingly. Trade accordingly. Use wisdom. We get to trade. We don't have to trade. This is a mindset that we really have to grab hold to along the way, is we don't have to trade every day. We get to trade, and if it works out great, then fine. But watch it. There's no reason to be stressing yourself out about what's going on with the trades if you're just watching and listening to the press conference, seeing how the market responds, putting that in your notes for subsequent times. Put that in your notes for later. All right. So we wrapped up last week. We wrapped up the start with the chart challenge. Yep. to start with the chart 5-day challenge. Ooh, it was fantastic. We had lots of people, almost 70, I want to say 70 or 80, I want to say about 80 people were signed up for the challenge. Of course, it never, everybody who start off don't be at the end. That's just the way it goes, right? That's the nature of the beast, and we just know that, and we deal accordingly. But we started off real strong on Monday, had a really good following all week. The VIP group were the ones who were able to have the after party. After it was all over that evening, every evening, we talked about several different stocks. We charted, did all the things that go along with charting, and we offered trade ideas for each of those nights. Worked out really great. At the end of the week, though, I offered and opened up an offer for the Chart Your Way to 100K, the stock charting training class. Right? It is a full training class. I am fully aware, and if you're a trader of worth any of your salt, you know that charting is important for your trading. Now, for a while, I learned how to chart very early, but for a while, I didn't have the same level of respect for charting that I do now. Okay. Now, so I'm gonna tell you, sometimes you don't know what you don't know, and you don't respect the thing that should be respected, and then you look up way last one day and be like, I probably should have gave a little more weight to that, because because see, all this stuff that I'm overlooking and missing is all inside that chart. Yeah, all the stuff that you're missing, you're overlooking, you're lacking in your trading, it's inside that chart. Alrighty. This training class covers everything from the basics. We start with the basics of what is a candle. We start there. And many people don't need that, but there's some people who do. So we start with the what is a candle, and we grow up from there. We talk about indicators. Well, not early. We talk about the charts, the elements of the charts. We talk about candles, candlesticks, candle patterns. We talk about support, resistance, gaps, trends. We talk about all that. Then when you're ready, after you've got a nice firm foundation, then we go into indicators, right? I'm not talking about anybody. I'm talking about the people who I know who are out into YouTube land. I talk to a lot of people all the time, and I know that there's some people who don't know anything about a chart. And there's some people who do know some things about a chart, but they're not necessarily utilizing it, or they have some things they don't really understand how things tie together. And I'm going to help you bring all those things together. Okay. So for this weekend, the Chart Your Way to 100K product is, you can find it at, put the website. I think the website is actually scrolling on the bottom, but let me put it here in the chat. That way you can just click on it if you want to. I'll come back here. There we go. Chart Your Way to 100K.com. You can go ahead and register for that. Now, if you sign up this weekend, actually, I'm letting it go till tomorrow night. If you sign up with it, I'm going to offer in addition to this, a 4-week window of time where I will work along with you to make sure that you're understanding the material. So yes, you will have the charting training. You're going to be able to, and tasked to do the studying of the material beforehand, so that when we get together on a weekly basis, we're going to come together and put to practice what you learned in the thing. But I'm going to help guide you through it. What you learned in the training class. I'm going to help guide you through it. All right. The price is $200 off right now. So for $497, you can get the full Monty, and you can get the 4 weeks, and you get access to our Telegram group. Right. So you can come and hang out with us in an exclusive Telegram that goes along with this stock charting training course. But listen, you don't want to be waiting around, because I'm not going to offer that. I want to be able to start the weekly trainings in about a week. So I'm going to give it time. I'm going to market it for a week to make sure that everybody who wants to be a part of it can be a part of it. And then we're going to close the doors and keep it pushing, right? At least we'll close the doors on the 4-week training. The course will continue to stay live, right? But we will close the door on the 4 weeks of interactive training with me. And then basically in the future, you'll have access to the training, but you won't necessarily have access to the 4 weeks. All right. So if that's something that catches your attention, it raises your dander, or something that you absolutely know you need. Okay. I know I'm talking to people, because I know for a while I needed it, right? I needed to lean in more on my charting. And as I started to do that more, I definitely found out there was a whole lot of stuff I was missing, and my profits were directly affected by the fact that I wasn't charting to the level I should have been. Period. I'm just being transparent, just being truth. I'm not, talking about anybody. I'm just saying that I know that that's the case, because it was the case in my life. And if it was the case for me, I knew It was the case. It's a case for a lot of you. All right. So chart your way to 100k.com. Go ahead and grab hold and let's go as a group. Let's work as a cohort to get you better. Right? Get somebody you trust. I guess you can. I feel like I'm trustworthy, and I hope you all can trust me with your learning. And if so, then let's go ahead. Right? Let's go ahead. We're going to teach whoever comes along to be taught. This is the list for the week. Now, if you're part of my membership, you can see this entire list. None of this faded out stuff is here. You can see the whole list if you're part of my membership. If not, then you can only see what we have here, right? And you can, become a part. You can become a member if you want to, join up with the E2T crew. You can join up with us at educatortotrader.com. All righty. But let's look at some of these. I want to put some of these on the chart. If you've got something you want us to look at that I'm not going to talk about, but I'm going to tell you the ones I'm going to talk about, that way you can see, and I want you to put yours on here. I'm going to do Amazon. I'm going to do TTD. I'm going to do Shop. I'm going to do Exxon, and I'm going to do Uber. Those are the 5 that I'm doing. If there's something else that you want us to look at, then go ahead and put them in the comments. Go ahead and put them in the comments. I'm not sure why that's not seeming like it's going, but it says it's going. We're going to believe that it is. Okay. Okay. Here we are, back to the charts. I can close this off and put the chart back up. And then I can add that to the stage. I also want to look at SPY. I'm going to start there, actually. I'm going to start with SPY. I see Netflix on the list and PayPal. Okay. This is SPY on the chart. I believe SPY closed up the day. Maybe it was the week. I saw a hammer on SPY and was like, that sounds interesting. Looks quite interesting. This chart looks a lot like the SPX chart, huh? They don't run exactly the same, but they do run similar. Let's go with, I got you, Lisa. Looking at it on the weekly chart. A lot happening here. Sometimes when I have too many lines on my chart, it bothers me, and I'm like, I need to put these tools up here to the right, and I still have not figured out how to put those tools up here. Somebody told me. Let me see, settings. I want to put my tools up at the top of the screen. Oh, that's not where it is. Style drawings. If somebody knows how to get me to put my drawing tools along the top there, let me know. I want to be able to do that. Maybe under settings, that says style, settings. Is that going to take us somewhere where we want to go? Appearance, equities. Nope, I can't figure it out now. And I wanted to figure that out the other day and then forgot to go back, and somebody put it in the chat for me, and then I forgot to go back and look at it and do it. I want to be able to put these tools, my little tools here, the things that you put lines on the charts, trend lines, whatever. I want to be able to have them hanging out up here. There's a way to do a tool and then have it to be like up here, like a lock in where it's like pinned. And I forgot how to do it because I know there's a way. Save a new drawing set, create a drawing set. No, that's not what I want. Okay. Anywho, if you do remember, then let me know. eBay and Meta. Okay. Let's see what we see. We've got, this is SPY on the weekly chart. This was last week, the green week, just like SPX did. This is going to move here. Support is at 524, still on an upwards ride. We see that. Moving average is just touching here, touch here. I'm not sure what made me write this stuff here, but some of these things are, I wonder if that goes with something else I put there. It probably does. I think this is I think that was a Fibonacci. This would be a 2-up candle, gives you an indication that it may want to go on up, but we do still have pretty good amount here at the top of some buying pressure. Let's look at the weekly chart again. I'm sorry, the daily chart. Now, because I said this already, but because we're up here at the all-time highs, this is trading. This is tricky trading going upwards. Unless you're operating as a seller, which we do, and you're looking at put spreads. You're looking at some put credit spreads because we're hanging out up here. So, yep, we're in the zone right here. We're looking at about 530. You probably could go down if you were feeling, a little nervous about the closeness of it. We could go down to about 528, which is the top of this hammer, 528 to 529, looking for something that could be a weekly version of a put credit spread. We can look for a weekly version of the put credit spread. Come on, darling. There we go. At the end of the week will be the 14th. We can trade SPY every single day. So if you want to do that, but if you want to look at it for the weekly, you got a plus minus 7.6 over here. That's basically, if we take away 7 here, we're going to be at what? 527, 526, 527. That puts us down in the 76, 79% probability out of the money. I like 526 or 527. If we switch this over to 526, it's currently paying, well, the market is closed, so these numbers will shift when the market opens and the prices start to move. But if we were acting like the market was open right now, 526 is paying $18 for one spread, and 526, 527 is paying $20 for a one spread. 20% return on that collateral would be good. Now, you could do this on a daily basis. You could decide, I'm getting in today to exit today. I want you to be careful, though, when you are trading SPY for 0 DTE and you're trading as a seller, then you need to know that at the end of the day, depending on where the price is, the broker is probably going to close your trade. The size of your account matters also. But if the broker does their little risk management sweep and they determine that your account really isn't the big enough to hold an assignment, they will close off SPY. So I would suggest in place of SPY that you trade XSP. XSP is the mini of SPX, and it is cash settled. So because it's cash settled, you don't have to worry about shares. You don't have to ever worry about shares being assigned or anything like that, because it's all cash. If you win the trade, then you keep the cash they gave you. If you lose the trade, then they take the cash. That's all that goes. That's the way that goes. You don't have to worry about any shares. People get real nervous about being assigned, even though if your account can't withstand an assignment, then they basically just take the money off the spread. It's really not a big deal, but people do get nervous about the email that says you've been assigned. People get a little nervous. Okay, here we are with Netflix. I'm going to go to the weekly chart first. Let's go to the weekly chart first. There was a couple weeks where we just kind of have paused here. That's not really an inside week. It's actually a little bit lower. So this is actually what would be called a 2 down. If you're a stratter, this will be a 2 down. It's not enforced per se because it's not, it didn't really close under there, but it's trying to go, maybe potentially trying to go back down. We'll have to see. You can't really tell whether it's, trying to do its thing until it starts to do that thing. Trying to do its thing. Okay. So if I'm looking on the weeklies, I do see a few more support and resistance areas along the way. And there's something here. This is a weekly chart. So every candle is a week's worth of data. Okay. Looking here. Netflix. Looks like Netflix is definitely looking a lot more bullish than it is bearish. You see our trend line. Let me move some of these. I like to have as much of my chart as I can see, but sometimes it doesn't give me enough room if you add these other things at the bottom. So we're looking at a trend. We've been trending from, what's that, October till now. We've kind of been on an upwards ride. Of course, Netflix has gone and kind of danced around and hung around this 9 period. It even pulled back to the 20 period moving average, which is what this black one is, and then went on up from there. I don't think, let me see if we can find there. Oh, yeah, there is. I'm not going to say I don't. I'm going to quit doing that. Sometimes I'll say, I don't think there's any support resistance up here. And then I go back and see that there's resistance up here. So looks like 681 is some resistance. And if you want one a little bit higher, there is 690. Okay. So if you're looking here, it's been, 2 or 3 weeks here in a little bit of a zone. And it was in this same zone back a few weeks before that as well. It dipped out of it and came back into it. So if I was looking on a weekly chart, I probably would go with a put credit spread, but I would also I probably would look too at a call credit spread, because, there's resistance here and there's resistance up here at 681. We're currently at 647 though, so that may not feel as comfortable. That's a big old jump, and there may not be any premiums up at 681 if current price is at 647. But I think when I go to the daily chart, I'm going to be able to see some more resistance lines in between these two. So who asked for Netflix? Asleen, what are you thinking about for your Netflix trade? What are you thinking about? What are you looking? You're looking at a put credit spread, a call credit spread. What are you thinking about? So that way we can see what's going on here. Here we are on the daily chart now. On this daily chart, we've got some support at 631. And let me go back to see what we got for resistance. Nope, I didn't want that. I wanted this. And I want to go back to see. I may need some more time. It doesn't seem to want to give me the time. Time frame I need 2 years, looks like. Maybe. Like I might need more than 2 years. Yeah, we should be back up here in this area. If you pull out, sometimes you can see where the peaks and the valleys are, and that gives you some, you can, put your stuff on the chart, and then you'll know where to go look. But it looks like back in here, the same place where support and resistance were before, there's some more stuff happening in there. I'm going to see if I can make it bigger and stay in that same zone. Is that where we are? Did I move too fast? No. Looks like we're here. Looks like this is it. Yep, we're right here. About 671 is some resistance. And there's also one at 653. There's another couple in here. You can put lots of lines on, but I'm looking for peaks and valleys inside of here, 662. So if we take ourselves back to where we were, we can see some more support and resistance, because the zones don't really change. If there was a zone once, it could potentially be a zone again. Price goes through it, doesn't mean that negates it as a zone in the future, right? If it was a past zone, it probably will be a future zone. Ward, there is no XSP on Robinhood. You have to be on Thinkorswim. I think Webull, Tasty Trades, those people all have XSP. Robinhood doesn't carry that one, or SPX. It doesn't carry the cash settled. Maybe one day in the future they will. So Asleen said she was looking at 665 and 667.5 for a call credit spread. I'm liking that for a call credit. Let's go look here to see what on our chart here. Take it back to single. 665 is actually 84% probability out of the money. That would be safe. Even 660 might work. Let me go look at the chart one more time, see if 660 is good. Well, we've got 653 Did you say 660, 665 or 655? You said 665. Okay. So let me go. I want to look at the plus minus number. Plus minus 19.5, or you can add, 19.5 is going to take us up to 660. Yep, you had 19.5 to this, you're at 660. So 660 or a little bit higher, that's going to be outside of the plus minus number. That's going to be outside of what the chart is showing. I mean, this candle, this wick here shows it goes all the way up to 664. That would be maybe why you want to do 665, but this is just the one wick. It does say that the price can go up there, right? This one, 664 was the high. This doesn't seem like it's 664, but yeah. So 665 would probably be the safest, but this don't, you see it didn't close up there. So anything above 660, I think would probably be fine, but definitely do what you're comfortable doing. And if we look at 665, 667.5 looks like market's closed right now, but it's only paying $13 today. So if you're going to get into this trade, let the price come up some more, much closer to that zone so you can get better premiums. You definitely, I mean, you want to be safe, but you also want to get at least 10% of the money in premiums. All right. And at this point, you're leveraging 250, but you're taking in 13. Okay. Again, not telling you what to do. This is not investment advice. I really am not skilled enough, or, I'm not in a position to do that. I'm just saying that based on what I see and what I'd like to do, I would look for at least 10%. Right. So 662.5, if you came in one closer, that one's paying $50. And actually that 665 is probably going to pay something different once the market opens. It's saying that it pays 13, but I'd be surprised if it's paying $13. That's right at the plus minus number. Yeah, I'm thinking on Monday when it opens, tomorrow when it opens, this is going to pay better. 665, I'm liking that. I'm liking that one for call credit spread. Asleen, good pull. Okay, who put PayPal on the list? If you put PayPal on the list, tell me what you were looking for. Royal Diadem, what are you looking for on PayPal? What are your thoughts? I'm going to look at the chart. Tell me what you're thinking. Let's go to the weekly and see what we see. All righty. PayPal went on about its way last week. So, yep, we about to make this move right now, baby. PayPal said we making a move. Okay, so I totally see some support down here because it definitely came out of this buying zone, off of this support strongly. This is support. Both of these areas would have been, this whole area would have been support between 61.50 and 62 and some change. But it does seem like it's not able to jump and go up too high. So I would definitely keep in mind that it has some resistance. It's just below this. It did close above this resistance, right? And it's in the zone now. It closed above there, but it didn't close against this big boy back from January. Right, there is a big old candle here, but that is an earnings candle, which it went up there, but it didn't stay. So a lot of times you'll see those big wicks when it can go up there, but it doesn't stay up there. So let's see, if we were looking at resistance above 66.97, we could look there, or we have 74 up here. There's some more in this area on the weekly chart. Okay, several different levels looking, but I do see a put credit spread at this point. Call credit spread if you want to, definitely you could go both ways, get beyond this and get beyond where earnings popped it up to beyond $70. That could definitely be a good move as well. I'm a fan of iron condors. In case y'all didn't notice, I'm a fan of iron condors because you can use your collateral to get on both sides. And I like the fact that you can do that. Asleen said, I sold on Friday. So why were you asking me about something you already sold? Oh, you opened the trade already. I was like, what do you mean? Okay, no, you sold it on Friday for this coming week. Good move, good move. I hope you got some good premiums. Okay, so Roy, I've been trying to get through the gap. It's moving on some news of a new CEO, and I'm interested in a call credit spread. Okay, that sounds really good. Then let's see what we got up here. Yeah, I'm a fan of iron condors, and I'm a fan of getting in on Friday for the following Friday, because then that Monday, Tuesday, those trades generally, theta has helped it to draw up some, and you can look at getting out. PayPal, I see 68 is the support, and where this wick is kind of up here, but it hadn't closed up there. 68 or 70 on the daily chart. If I was looking at the bottom, this big old green candle here, there's a gap underneath here. Let me get in a little closer so I can see what's happening here. Sorry if I'm bothering anybody's eyes by moving the chart like I am. But I like to chart the gaps as soon as possible. Okay, the gap goes from the close to the open and then pull back off the wick. From the close to the open and pull back off the wick. Because basically it gapped up from where it closed all the way up to here with the wick down a little bit and went on its way. So this is the gap from 63.5 all the way up to 64.19. That's the gap we're working to. Moving on some news, it's been trying to get through the gap. When you say get through the gap, what gap are you speaking of? What gap are you speaking of, Royal Diadem? Because if I'm looking on the daily, let me go to the weekly, because maybe I missed one back here. It could be a gap on another time frame that I missed. Aye. Yeah, Robinhood has its pluses and it has its minuses. It definitely has its pros and cons. There was a larger past gap. Okay, cool. So I did see this little one that I'm just marked that one in the middle of here of the weekly candle. Yeah, if I was going to do a call credit spread, I'd want to get above 68 or 70. Let's go look here to see what the numbers look like. Plus minus number is 2.5. Out here, adding 2.5 puts us at like 70. I would do it kind of round. You can use a calculator if you like, but I'm looking for round numbers. At 2.5 of this, you're looking at about 70. And 70 is a 82% probability out of the money. I'm all for that too. 82. I'm generally a 70s person, but I like, 82 will be safer. So if we look at 70, from 70, 71, you're going to collect about $12, 12% return on your money. You can go with that. If we're going to subtract 2.5 from here, that's going to put us around 65. So if you wanted to look on the other side, there's another $13. You could maybe do $26 with your collateral. Pull that in for the same $100 of collateral, which really will be $75. And then you're on both sides, right? If you see things going more in one direction, then you want to ride with that direction, right? But I see that PayPal has been in this has been in this consolidation for all these weeks. What's this, 3, 6, 8, 9 weeks? It's been in this consolidation area for 9 weeks. So if you get below 61, if you want to go a little further down here and you get above 68, you're hanging. This is where it's been for, 2 months, two and a half months. Hey, Lorenzo, been here for 2.5 months. All right. I like that PayPal one too. Got PayPal covered. PayPal's an iron condor. Let's go to UPS. Whoever put UPS on here, what were you looking for? What you're looking for? We got what you're looking for. Lisa, what are your thoughts for UPS? I think UPS might have been on our list this week. Let me see. No, where are you going? Is UPS on the list? Are you going to open? It's deciding on whether it wants to open or not, I guess. Okay, UPS. Looking at the weekly chart, we're right here in some support. Right here at some support from the weekly back in October, and it's dropped. The wick has hit this a couple times. This hammer says it's trying to go on the other way. Trying to go, these two hammers say it's, I really would like to be moving. Really would like to be moving, all right? But we have been in a downwards trend, and that's not to be ignored either. That we've been trending downwards on UPS for a while. Let's put us a little, this is a weekly, nope, this is a weekly chart. So if we were to even go from here down to where we currently are, I mean, we've been in a downwards trend, right? Nope, I don't want you to do that. Stop it. Let me see if I can get this properties, make it a little bit thicker. And maybe we change the color. Okay, that's our trend line coming downwards. Will it come on up to this trend line? It could. It's looking like it kind of wants to bounce off of this support and come on up. This would be what that downwards wedge, and it kind of narrow, and then it goes, hopefully it pops out going in the upwards direction. Let's look at the daily chart. Lorenzo said, I know I did a leap call for UPS this past week. Usually logistics ramps up a bit historically during the election year. Okay. Okay, you sang along. I love it, Tanya. Sing. Y'all know we're going to sing some songs in here. That's what we're going to do in here. We're going to sing some songs. I want y'all to know I still have not been able to raise my friend on the phone. So just in case anybody got some news, I have not been successful with locating my friend. Mi hermano, I have not been successful. So we're still saying prayers. Alrighty. I do see several gaps that UPS has on the daily chart. There's a few of them here. These are getting filled. These are getting filled. Okay. But our moving averages are all fanned out going downwards. This is a no bueno as far as upwards movement goes. But of course, moving averages change directions. I think if we were looking at, what do we have on there? Did it ever pop up? Let me see if it ever came up. What is this? We're looking at UPS. UPS is not on our list, huh? Lisa, what are your thoughts? You looking at UPS for, let me see, this is we do have resistance right up in here, right where the wick went, but this has also been here for 4, 5, 8 days, 10, 11 days. It's been in this zone. UPS has been here in this zone. So let's go see. We're looking, I would want to get below these supports. It's going to be good support on this I actually got from the weekly, 134.56. And we've got something at the top up there, 139. Let's go look at our plus minus numbers. Look at our plus minus numbers. 80% probability out of the money is at 134, which is good because that's below where we said was on that chart. 134 is down here, right? That's below there. And for our call credit spread is 141. 141 is above what we see as resistance. All right. So let me see what we got. UPS 134 on the put side, 141 on the call side. Let's put it into some monies. Turn it into vertical and see if we've got money. 134 is going to pay $15. 133, 134 pays $15 now. And then 141, we said 141, 142 is paying $17. So at this point, you're at $33 for an iron condor for UPS. $33. Listen, that UPS one ain't looking like a bad one. Not looking bad at all. Now, the numbers are going to change a little bit once the market opens tomorrow. So you're going to keep that in mind. If it makes a big jump one way or the other, then you're going to want to move, pick your strikes accordingly. Once you come back into tomorrow morning, whether you're using UPS, whether you're using Thinkorswim or you're using Robinhood, you want to look at, if you're on Robinhood, you probably look at the delta. You want to look at the, make sure that the delta is 0.2 or below. See our delta, this right here, when I'm looking here, probability out of the money is 80%, but the delta is 0.18. So the delta you will be able to see on Robinhood. I don't think Robinhood has probability out of the money, but for that strike, Robinhood does have the Greeks. So the delta 0.818 over here, and the delta at 141 is right 0.22. So you want 0.2 or right around 0.2 for your delta. All right. Okay, I hope we're clear on that one. Okay, 133, 134, 141, 142, unless you want to widen it out some. Okay, I got UPS. eBay. Ward, what are you looking at for eBay? What are your thoughts? What you want for eBay? I think that was you who asked for eBay and Meta. What are your thoughts on eBay? What are you looking to do? What are your thoughts here? I'll put some lines on while I wait. This is the weekly chart. We've got resistance at 54. We've got some support at 52.61, some more support at 49, and there's actually support at 50. 50 and some change, 49 and some change. Support back here at 48.38. Let me see if there's some more resistance above that one right there. Yep, there's another resistance at 58.19. Okay, this is the weekly chart. This is the weekly chart. New comments. Iron Condor, okay. Iron Condor. Let's go to the daily chart. Okay, we've been in the zone for a minute. That may not be a bad notion. Okay, I see 52 and 54. We're currently at 53 and some change. Let's go see what our plus minus number says. Plus minus 1.7 means if we add 1.7 of this, we're at 54.7, or 55 would be the way to get outside of that. And if we subtract 1.7, we'd be at about 51. We're really subtracting 2. So we're looking at 51, 87% out of the money. And we're looking at 55, 51, and 55. Let's see what we got here. Vertical, 51. Monies for 50.51. The $1 is definitely not accurate. You'll wait till the market opens for that one because 51 is not accurate. And 55 says $6. Yeah, these numbers aren't accurate for now, but I do think you can look back at them. eBay, what did I say? 50, 51 put credit spread, and 55, 56 call credit spread. Gotcha, Lisa. No problem. Okay. That's what I see on eBay. Let's go move over to Meta. Let's go move over to Meta. Some resistance up here at 507. Meta's been on a move though. Hasn't Meta kind of been on a tear here recently? And if so, if the more recent move has been very drastic, and you can tell by the moving averages that it has been a little more drastic. Notice if the moving averages were kind of like hanging out together here for all these times, all these days. And then next thing you know, right here on 6-4, they split off and started moving. That means we got a little more. Now, also stock price will want to come back to the 20-period moving average. But with us trading on from week to week, you want to be mindful about that. Let's put our gap on because there's a gap right here that's going to want to be filled. You know, gaps do eventually get filled. They don't always get filled immediately. There is a big old gap that's what Meta is coming back through. There was a gap formed back in April from this place here, back from it's like it was an earnings gap, big drop down. So if I was to go across here, I'm going to show you how we draw the gap and then to show that it's getting filled, right? So all of this was the gap. All of this was the gap. But then now price action has come on back into it. Remember, I've talked to my community too about how do we trade ourselves through a gap fill as a seller. And basically as it gets into the gap, you just ride on with it, right? So all of this price action has filled the gap, filled the gap, filled the gap. There's a little bit in the middle that nothing, but from the standpoint, the gap is completely filled except for this little piece here that got skipped over. I would consider the gap filled though, because there's enough price action through the gap. And then the top of the gap will provide support or resistance, which it kind of did here. They see how it's kind of stuttering right here at this spot. It's got to try to get through and going over. Price went up here on June the 6th, but it's pulled right back into there. So I'll look at Oracle in a second, Lorenzo. That's what I see for Meta. Again, we're kind of on a nice little tear going upwards. I wouldn't want to try to get beyond that per se. You know, you want to look to see how can you ride with this. Can it come back to the gap? Absolutely. Will the trend line hold? Potentially, right? So let's go look to see what kind of numbers we've got. Plus minus 16.5. So if we're looking at a put credit spread, right? If you subtracted 16.5 from this, you're at like 476, somewhere around there. 475, 476 puts you at 77. Probably 475 would be an 81% probability out of the money. 475. So looks like that's paying $39, 472.5, 475. Okay, Meta 472.5/475 put credit spread. Lorenzo said, I ended up getting caught in that chop area, not thinking they would consolidate as long as it did. Yeah, sometimes it doesn't. Of course, it doesn't always fill the gap quickly. It just rides through the gap. You know, see how this, it was in this big old gap here and it just kind of went up like it really wanted to go do it. I'm ready to go for it. It pulled back down, went up and pulled back down. Inside of any gap, there's also zones. One of the things I was taught that there's like 25%, 50%, 70%, 75% and 100% inside. So you can put like a quarter, like Fibonacci in there, and those zones will play support and resistance for you as you go back through the gap. A lot of times people don't trade it like that. We think it's going to get into the gap and run on through, and that's just not necessarily the way price action goes. We know that though. I know you already know that, Lorenzo, that's not how price action runs. Oracle. Any ideas on verticals for Oracle? Let's go look. No, I don't want the F there. Thank you. Oh, and I guess I should spell it right. ORCL is Oracle. Now, Oracle has earnings this week. So one thing I would say is I wouldn't trade Oracle until after it had its earnings, because earnings and verticals don't seem to like each other very much. Earnings and verticals don't really seem to enjoy themselves. So if you decide you want to do an earnings trade for Oracle and a vertical, you probably should. If you want to do something, if you want to do anything, it would be a buyer strategy or wait till the earnings are announced. I'm not a fan of doing earnings with vertical. So 6/11, which is Tuesday. So I probably would wait till after the earnings play to see what kind of price action you ended up with, and then I would do another chart and see what would be good zones for Oracle then. Just my thoughts. Okay, let's go look at Amazon. Yep, verticals are a powerful tool, but we definitely don't want to match them up. They don't match up well with earnings. Okay, I had a gap shown on on Amazon. Y'all see I had a gap here, and then it went in, did its thing, and danced around and went through it and came back through it again, and now it's all filled up. This gap here, the one that I posted or charted here, didn't fill all the way. Looks like it's got a little bit of room. I'm going to extend it out so that way we can keep it on the chart, but it's not finished being filled. It finished, oh, well, maybe it is. This wick over here, it is finished being filled. I didn't look at that wick. This wick is pretty much did it in. There's a little bit off that wick, but very, very little left. This wick here came back and got it. Right? So let's see. I see Amazon on the put credit spread list because it has been coming up, but it is coming into some resistance as well. Not sure why I have that line there, but maybe because of this. And that could be. I'll put it back. Put it back. Tell the babies, put it back. Okay. Oh, so I got it for a put credit spread, and I've got it at 177.5. There's support right in here too. 177.5, and I've got that based on plus minus 5. So if we subtract 5 from up there, right, that puts us at 180. But I wanted to say there was something else that showed me on the chart that it needed. Maybe it was this line, this one here, which gives you all this room. Amazon's been on a good little move here recently too. So underneath this strong candle here is where I was putting the support in this general area, right? 177.5 is what I decided. So, and you can see that on our graphic. See, I put that right here on the graphic, 175, 170, lots of sevens, 177.5. I actually corrected this on a different one, and I didn't come back and replace it here. But you could do that with Amazon, or you can also decide you want to do the other side, get onto the top side of it. If you are, I would want you to be careful because this candle here went all the way up to like 191. So could it go? That's only 7 points away, but you want to be beyond that, maybe 192.5, which is a 90% probability out of the money. So if you went to 192.5, that's going to take in about $14. And if you were partnering that with the 177.5, 19 and 19 is going to give you $38. So if you're putting them together, that's going to make for more profits on your trade. You expecting that the put credit spread is going to be the one that you're really making your basis trade off of. But then the 192.5 is going to be like an add-on. And according to the chart, 192.5 is above this big old line up here, this big old wick up here at the top. 192.5 is above that. Okay, so that may offer you some opportunities. Well, use your 250, pull in about $40. That's about what, 18% return on your monies for the week? Yep. Okay, that was Amazon. TTD. Let's go to the chart. You know what? I did a put credit spread one already. Let me go to a call credit spread one. Exxon or Shop. We got one of those. People seem to like trading Shopify. People like that one. I believe Exxon is still a one spread up here. Exxon is a pretty good one to trade because it does stay liquid. We got to incorporate our ENPH too, E2T crew, because we've been trading that one pretty steady. Okay, so this price action from last week has closed off the gap that was set between the 3rd and the 4th. It's closed off that gap. This price action, this wick here closed it off. And if we're looking at call credit spread, because this has been on a bit of a downwards ride, looking at the call credit spread on Exxon, can it come on up to this? Absolutely. But if we've got some resistance, 116. Resistance is right here at 114. It's climbing, but it's not moving super fast or super hard. So you may still be able to check out there. Let me go look at a call credit spread. 116 is 85% probability of the money. Feeling a little more froggy, you can go with 115. But let's go to 116, 117. That's paying $12. 116, 117 is paying $12. If you were feeling just a little more, a little more strength, you can go with 115, 116 for $19. Okay. You could run with that one. That was Exxon. Now, EMPH has been one we've looked at over the last couple of weeks. The premiums are really nice. It can be a little mover though. It jumps around in phase energy, which we were just talking about energy with Exxon, but it's kind of got a little bit of motion. Look at this last week. So my trade Friday, I had a put credit spread on Friday and it started moving down and it kept moving. Now, initially when the market opened that day, it was doing fine. And then I looked up and it was like the amount that was still, I had the close order on it, so buy it back. And it started off being like worth like $5 or $6, something like that. And then next thing I know, it was 7, then it was 10, then it was 20 something, it was 30. I was like, okay, wait, you're going the wrong way, buddy. And then I looked at the chart again because I was doing all kind of other stuff and I realized it was still going down. Now, what happened on Friday? I don't really know. This move was very steady. I was shocked. Does anybody know what happened with Enphase on Friday? Any of us who were trading it? Anyway, I ended up buying mine back. I ended up buying the put credit spread back, and the put credit spread I bought back at break even because I had already made call credit spread money. So I went ahead and as they say, I bought my junk back. So that way I was good. And I filled these little bitty gaps, but that seemed like a lot of movement maybe, but it did fill all these gaps that were sitting back here. That could have been it. All right. So if we're looking at what is our support and resistance numbers, okay, 133 is there. We've got some more happening in here. Let me change this to a line and see if we can see something in the middle of it. Yep, there we go. 130, we've got a peak. 129, we've got a peak. And 127, we got a few of these. Let's put a few more. So when I change to the line chart, I can see the peaks and the valleys. And that lets you know that these are places where price action, took a shift. They're pivots. I'm looking at these lines, this line here where my mouse is. Okay, then you put it back on candles and you can see when it's harder to see what happens here, you can see a little better with the lines. All righty. So if I'm looking, I'm thinking still from a call credits because I don't see this is a good support here, but there's another one at 120. Let's see if let's go to a higher time frame and see if we determine whether we think it's bullish or bearish. Do we think Enphase is bullish or bearish? What do y'all think? Let's go back here and see. Is it bullish or bearish? Now, overall, I'm going to go to a monthly chart, see if I can get a month in. Okay, on the monthly chart, it does show like it's been going. We've got higher lows, not really higher highs. Y'all see that? We've got higher lows happening, but not higher highs. It's pretty much, we've almost got lower highs, really, to be honest. Let me put a trend line on just the tips of these. We've got that tip. Come on, give me the line. Nope. Hope y'all can see that. We got the tip of this candle. And if we're going to the tip of that one, I'm just going to connect those together. All right, we'll make it red so everybody can see what I'm looking at. I'm turning it red. And let's make it a little bigger so we can all see. Okay, this is a downwards coming, downwards moving trend. The lower highs barely, it's not going real strong there. But if we go from the lows, we've got a low. Where are you? We got a low here. Oh, come on. There we go. And we've got these lows. What we're doing is we're got a what is called a rising wedge or a flag pattern, maybe a bull flag. I don't know if that's kind of, this one at the top is feeling more flat. I wanted to make this red and make it a 3. We're coming in, and then it'll break out. It is in a zone. Might be becoming bullish. Yeah, it's definitely coming in, trying to, at least the lower, the higher lows are more drastic. This is a monthly chart, is more drastic than the highs. So we may be coming in and going more bullish for sure. Pull out the time frame and go on from there. So now I'm on the daily chart now, still seeing higher lows, higher lows, higher lows. If I was to go ahead and put this, even if this is the daily chart now, and if I was charting the trend line there. Oh, that's not the line I want edited. I want this line edited. Okay, coming right in there. I do see some higher highs along here. So if you look at it, we're kind of in a channel. On the daily chart, we're more in a channel than we are. Y'all see that? We're kind of channeling, which now that we're on the daily chart, this channel going upwards tells us that we're bullish. This channel tells us that we're bullish. So see how the different time frames can give you different information? Okay, I don't want that. I want you, baby. Okay, we got a little channel we're going with. Okay, so if in phase is bullish, it's come back down to the bottom of this channel. The thought is that it would go on back up some more. That's the thought. We've got support here right where it is at the 120. I think that's where we are. 122 is where we are. So let's go look on our chart then. Plus minus 8 is our number. So if we take 8 away from this, we're going to be at 114. Right, if we take 8 away from that, we're at 114. 81% probability out of the money. I have found so far that in phase does need to be respected with this plus minus number. You jump a little closer if you want to. 113, 114. It's paying $18 for put credit spreads. We go over a lot of different stocks because I want you to be able to see different ones, but I also want you to pick 1 or 2 that you really like and then trade those over and over and over, right? Even though we're looking at a lot of them, I want you to see what you like and rinse and repeat that same stock, okay? I didn't get to share something with y'all, and I want to do that. Last week, we've talked a bit about PeakBot. Yeah, we talked about PeakBot. Well, I've been using the Trend Spread Bot. I think I posted this on my social media, so if you follow me on social media, you might have noticed this. But I traded TQQQ and Devon, whatever his name is. I traded him last week with the Trend Spread Bot. Basically, PeakBot, I pick the stock, and PeakBot goes in and enters the trade for me. So I did TQQQ twice last week. And the way I did it twice is the bot opened the trade the bot opened the trade. I think this is the right week. I want to make sure I got the right week. Yeah. The bot opened the trade on last Friday. And then on Monday or Tuesday, was it Monday or Tuesday? Let me see what it says here. It'll be Monday. Yeah. And then on Monday, I exited the trade. So I entered for $57, says here, and then I closed it for $6 on Monday. That same day, because the bot enters on Fridays, Mondays, and Tuesdays, if since that trade was now closed, the bot re-entered for my T triple Q trade and collected $55 more. And then I closed it in a couple days. I closed it on Wednesday for $10. So overall, I collected $96. I collected for that, just a T triple Q trade, right? Which is a 30% return on that. And you say, I'm only doing one contractors there, but because I want to be able to show you what's going on with that. Hey, Carmen, want to be able to show you those. So that was the trend spread bot. That peak bot we're beta testing it right now. And then I also did Devon. Actually, Devon we did it 3 times last week. I entered, exit, and it entered again. One day I thought Devon was done. I thought it wasn't going to enter on the Tuesday, and it did. So I was like, here you go again. But I ended up collecting a total of $57, which was a 38% return on my 150. So basically, I rinsed and repeated the same money, is what I'm saying. So PeakBot has the wheel bot, which is basically the put credit spreads. You pick the stock you want, and the bot enters the trade for you, collects the money for you, basically, into your account, and it will sit. And then at the end of the week, it will close the trade or leave it to expire worthless. Right? They have the SPY and triple Q daily bot, or 1 DTE bot, is in beta testing right now. But what I like about PeakBot is you've got these, basically you're able to trade hands free. And now it's connected to Schwab, it's connected to Tasty Trade, and it's connected to Tradier. We were waiting on it to be connected to Schwab, and they're now connected to them. So this is a plus, right? If you want to sign up, you definitely can go and get your 25% off. Use peakbot.com. E2T is the code that goes along with me. You get 25% off your first quarter of letting the bot trade for you. And if you want to just really do like a little, let me look around PeakBot with somebody who's there, Dylan, who is the CEO of one of the co-founders. I don't think he's a CEO. I think he's a co-founder. He's a co-founder of PeakBot. He will be happy to show you around PeakBot and let you see what they're offering over there. Alrighty. PeakBot is I am an influencer for them, so I do get I won't call it a kickback, because kickback sounds like they're underhanded. I'm an affiliate. That's a better word. I'm an affiliate with PeakBot, and that's because I believe in what they do. I believe in what they're doing. Okay, so the E2T membership is running. Don't forget, tomorrow morning, we're going to have our meeting. Our meeting tomorrow, where are you? The meeting tomorrow is going to start with, we're doing at 8:30. Where's my thing that said 8:30? I had a whole nice graphic that talked about we were doing it at 8:30. You might have already seen it already, because I've mentioned this a few times. There it is. But I don't think I'm on the right screen to share that. So let's share the right screen. Add to the stage. Here we go. Starting tomorrow, the morning YouTube call. I've been doing it at 9:30 in the morning, 9:25 in the morning. But starting tomorrow, I'm going to do it at 8:30. Okay, I'm going to start at 8:30 in the morning. Moves us a little bit before the market opens. That way, when the market is open, everybody's free to do whatever it is they want to do without being distracted about what's going on with us. All right, so all of us are going to get to be able to enter the market right on time at 9:30 to do whatever it is you want to be doing at 9:30. If nothing, most sellers, we're doing nothing but watching. But people who are buying are looking to do things, and I don't want to be an inhibition to anybody's trading. Okay, so starting tomorrow, 8:30 in the morning. Y'all join me? Y'all gonna join me? Are you all going to come and be with me tomorrow morning at 8:30? Y'all gonna leave me in here talking to myself? No, yes, no, yes, no. We'll be there. Yes, Alyssa, we'll be there. Somebody need to say, yes, I'll be there. I'll be looking for you to be there. All right. The membership includes the morning call, includes our weekly calls, includes our Saturday once a month coaching calls, and includes a Telegram group, and includes us just hanging out together and having somebody to trade with and helping you to teach and learn. Right. That's what is going on with that. If you want to join us there, feel free to join us there. I see Jermaine says I'll be there. Yay, yay. Jay, he says I'll be there. I want to go back to, before we wrap up this call, I want to make sure that if we have any questions about the Chart Your Way to 100K, that you're able to get them answered. Be sure, if you want to talk to me, you can talk to me in my inbox. You can send me a message. You can email me. You can talk to me in Telegram, right? But I want you all to avail yourselves of the Chart Your Way to 100K. All right. I want to make sure that we're on the right path for this year. That's really what this is about. I want to make sure that we're all, including me, on the right path for this year. And I totally believe that getting on the right path for increasing your portfolio is going to start with the chart. So you need to chart your way. We're looking for the 100K, looking for that in our account. We need to be charting our way to 100K. All righty. Again, you can go on there and go to Chart Your Way to 100K. Way to 100K.com. Right? Okay. If all hearts and minds are clear, I believe I've covered everything I wanted to cover. I'm still wanting you all to pray. Those of you who know, you know. And yeah. Okay. Okay, I think I got all the pieces. I'm looking to make sure I didn't forget anything. Lorenzo, come on and join us, right? I'm telling you, we're going to guide you. I'm going to say hand hold. If anybody feels that that's, beneath them, please don't, because I know there were some things that I was learning and I just needed somebody to come alongside me to make sure that I was going in the right direction. And sometimes we need two things. We may need somebody who comes alongside us to make sure we're going in the right direction. Two, some of us need somebody who's going to keep us from procrastinating, who's going to hold us accountable for things that we may be doing that are not productive to our trading growth. Because sometimes the enemy is the enemy. Okay, sometimes the enemy is the enemy. All righty. Okay, everybody. I'm going to bid you a fond farewell. I want you to stay green. I want you to get this money. And I will see you in the morning at 8:30 a.m. youtube.com/@educator-to-trader. Make sure that you subscribe to the channel, hit the notification bell, put the thumbs up, all the good stuff that go along with that. And let's get this money. All right. I will see you all in the morning. Bye-bye, everybody. Bye-bye. Definitely. He sure is, Marion. He sure is. Thanks, everyone.